Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. The Philippine stock market continues to plummet, falling back to the 6,500 level. Why the losing streak? We'll talk about this and more with First Metro Securities market consultant Aaron Sai. The Philippines slides 2 spots in a world digital competitiveness ranking. Foreign investment pledges surge in the third quarter. And the value of the global cryptocurrency market hits a record high, fueled by Donald Trump's return to the White House. First, a look at the financial markets. Wall Street's main indices ended lower Thursday after Federal Reserve Chairman Jerome Powell dampened investors' hopes for another interest rate cut this year. At a Dallas Fed event, Powell said that the central bank does not need to rush into easing monetary policy, especially in a big way. Traders are, however, still betting on a 25 basis point reduction at the Fed's December meeting.
We've had a huge rally coming off of the election. You've actually had, going into the election, the first 9 months of any election year, this was the strongest year on record. And then that continued the past couple months. Now, people are starting to see some of the picks coming out, and there's a little bit of, just a little bit of profit taking, nothing big really going on right now, but it's just a small pullback from a really large rally.
Over in Europe, markets closed higher as traders digested a slew of earnings. London's FTSE 100 was up 0.5%, while the DAX and CAC 40 both rose more than 1%. Now, here in Asia, in the Asia-Pacific, markets are trading mixed, breaking ranks with Wall Street. Japan's Nikkei 225 is up after the country reported that its third quarter GDP expanded 0.3% year-on-year. Investors are also awaiting key economic data from China, which will announce October figures for retail sales and industrial output. Over in the commodities market, oil prices are down at $72 a barrel, while gold is trading higher at more than $2,000 per ounce. Now, the Philippines slides 2 spots in this year's World Digital Competitiveness Ranking, now ranked 61st out of 67 economies. The country dropped in both knowledge and technology categories and improved slightly in future readiness from 59th to 58th. This slip highlights the challenge of staying competitive in a digital-first global economy. Local companies must adapt faster to technological advancements or risk falling behind. The government and private sector must also invest in technology and education to boost the country's digital capacity and future readiness. On another front, foreign investment pledges surge in the third quarter, with commitments reaching 146.75 billion pesos, a staggering 434% increase from 27 billion pesos last year. South Korea leads as the top source of these investments, followed by Switzerland. This spike in foreign pledges is a sign of growing confidence in the Philippines as a business destination, particularly in light of the recent efforts to improve the country's digital infrastructure and business environment. For local businesses, this surge represents a golden opportunity to leverage new investments and partnerships that can drive innovation and expansion. The challenge now is to sustain this momentum, how to sustain this momentum, and maximize the impact of these pledges on the local economy. Now, Morocco is advancing its nuclear energy strategy with the support of top French agencies. Company officials recently visited leading nuclear research bodies in France to explore strategic partnerships. These include University Paris Saclay, one of France's most prestigious academic institutions, and the French Alternative Energies and Atomic Energy Commission. Discussions centered on knowledge sharing, capacity building, and the potential integration of nuclear power into the Philippines' energy mix. This move signals a commitment to diversifying the country's energy sources and moving towards more sustainable and reliable energy solutions. On to some earnings reports. GT Capital Holdings of the T family reports a 6% dip in consolidated net income. It fell to 21.7 billion pesos for the first 9 months through September, down from 23.1 billion pesos last year. However, the conglomerate notes an 8% increase year-on-year, excluding non-recurring gains from lot sales and incentives under the Comprehensive Automotive Resurgence Strategy Program in 2023. The performance was bolstered by record profits from key subsidiaries. Metro Bank, Toyota, Motor Philippines, and Associate Metro Pacific Investments Corporation. GT Capital attributes their strong growth to a favorable macroeconomic environment, including stable GDP, slower inflation, and easing monetary policies. This performance is a mixed signal. While overall net income has declined, the underlying growth in core operations reflects a resilient economy. With favorable economic conditions and strong performances from key sectors like banking, automotive, and infrastructure, GT Capital demonstrates the strength of diversified investments. Now, Security Bank, led by the family of billionaire Frederick D, posts solid earnings growth in the first 9 months. Net profit jumped 12% to 8.5 billion pesos, while revenues surged 28% to 40 billion pesos. For the third quarter alone, Security Bank grew its net income by 14%, driven by a 36% rise in revenues. This performance reflects a strong and resilient banking sector. Now, higher electricity sales fueled the earnings of Citigroup Renewable Energy Corporation. Net income rose 6% for the first 9 months, while revenues surged 29%. EBITDA, or earnings before interest, taxes, depreciation, and amortization, grew 8% to 1.22 billion pesos. Citigroup has made progress towards its goal of promoting renewable energy since its IPO in June. Now, the company, led by Ed Saavedra, is on track to meet its target of 5 gigawatts of capacity in 5 years, with the construction of its first gigawatt of solar assets and the development of pipeline projects. Citicorp's performance highlights the growing opportunities in the renewable energy sector. The strong revenue growth and progress towards its renewable energy goals showcases the country's potential as a leader in clean energy. With the government support for sustainable energy initiatives, businesses in the renewable energy space like Citigroup are well positioned to drive future growth and contributions to the economy, while also helping to meet the country's energy demand in a more environmentally friendly manner. After a hefty price hike this week, expect a slight rollback in fuel costs starting November 19th. Estimates show gasoline prices could decrease by up to a peso per liter, diesel by as much as 95 centavos per liter, and kerosene by up to 80 centavos per liter. The Energy Department attributes this to OPEC's lowering of its oil demand forecasts, as well as to the U.S. Energy Information Administration's decision to cut its 2025 crude price projection. The DOE also cites China's weak economy, with investors maintaining a pessimistic outlook on Chinese demand. Now, the outlook remains sensitive, however, to global oil trends and to the performance of the Chinese economy, which could impact long-term fuel costs. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, 9:43 this morning, the PSE index is well entrenched in positive territory. This is a drastic improvement from yesterday, where the PSE index fell by 2.34%. It was a bloodbath yesterday at the stock exchange. Right now, we're seeing mostly shares are in the green, except for the mining and oil counter. That's the only one bucking the market's current uptrend. Right now, the PSE index is up by 2% to 6682. The broader all shares index up by even more, up by 2.2%. Now, the financials up by 5.53%, industrial counters up by 1.62%, holding firms up by 1.2%, services up by 1.1%, and the property counter, that needs to be mentioned. It's surging. Right now, it's up by almost 4% at 3.7%. So big gains. We're seeing big gains in the PSE index, which is in stark contrast to yesterday's bloodbath. Now, at the foreign exchange market, the peso opened slightly weaker at 58.80 from its previous close of 58.77. Now, it's worth mentioning that the shares of Universal Robina Corporation plunged to their lowest level in over a decade yesterday, falling 6.9%. This comes after the company reported a 54% drop in its third quarter net income compared to last year. The stock has now been in a 4-day slump, making URC the second worst performer on the Philippine Benchmark Index, which itself slipped 2.3%. That was yesterday. Analysts point to an EBIT loss in URC's sugar business for the first time this quarter, driven by lower prices, higher carrying costs, and delays in the milling season. That's according to a report from Morgan Stanley. Meanwhile, Citi analysts warn that EBIT growth could further slow in 2025 as consumers remain cautious with their spending, even if food inflation eases. Now, it's all worth noting that URC's basic earnings per share missed estimates, and the company is now at risk of missing its 2024 consensus targets. Another tough day for URC. Well, that was yesterday, and investors will be watching closely to see if the stock can recover in the weeks ahead. Now, to share his thoughts on the market, we have Aaron Tsai, the market consultant at First Metro Securities. Good morning, Aaron, and thank you for being here with us.
Hi, good morning, Maiki. Thank you for having me here.
Aaron, now the market, yesterday's drop was pretty significant and pretty sizable. Right now, we're going in the other direction. So much volatility in just these two sessions. What do you attribute this to? I mean, so yesterday's big bloodbath was, too much. Market was overreacting, would you say?
Yes, I think for the PSEi, we saw the main index is already down close to 14% already from its high for the year as of yesterday. And it's currently trading below the 61.8% Fibonacci retracement already. I think as at this point now, although the PSEi is already trading within oversold levels, with RSI at 2190 at yesterday's close, I think the price action is yet, to show us some signs of bottoming, Although the size of the candles that and the increase in volume that we saw in the past days, if we look at it in the positive way, can be signs of capitulation. Everybody's cashing out, and when this is over, we might see some consolidation in the PSEi. But just to be clear, we don't see it yet now. Bounces like what we're seeing in the morning trade are common after a steep drop. But be cautious. So I think prudence should tell us that we should wait for consolidation to happen before we act on reestablishing our position in this market. If some investors plan to take advantage of this drop, which is very tempting, at least do it in tranches. So you still have the dry powder once the market provides that opportunity to snap shares at better value moving forward.
Yeah, just don't move all in one go. Aaron, the bearishness that we saw yesterday, do you think that was the bottom?
No, I don't think so. I think the negative price action that we have been seeing in the past days have a backing. There's so much macro factors that can influence either sentiment, even locally, but most especially those for fund flows, globally, from global investors. The Trump win really spells a difference between having a more accommodative or maybe a more stable policy environment. As of now, the markets are already discounting major changes in the stance of the U.S. as far as policy is concerned. So I think we might have seen it. We might have seen it, but without the proper bottoming in the price action, we have yet to conclude that this time the drop that we have seen so far is already it. I think it would still be prudent to wait for clearer signs of bottoming from the market before we re-enter.
Yeah, that's right, Aaron. It's going to be a while before, Trump hasn't even been in office yet. It's going to be a while before he gets in January, and before the policies, the protectionist policies, although it's going to be all green light from Congress as it looks. It's going to be a while before those protectionist policies trickle into the broader economy. And in that delay, in that lag, it's anyone's guess what's going to happen. Now, I know this is moot, but, just to ask, do you think that if Kamala Harris won, do you think that the market would have reacted as dramatically as it has?
I think it would not, no. I think the Kamala one, if it happened, or if it did not, no, would have somehow provided anticipation of continuation or policy continuation for the U.S., no. And what we have seen for the past months, no, the positive sentiments in the equities market, in the broader emerging market, and in the Philippines might have continued, no, may have continued if Kamala won. No? But again, as you mentioned earlier, we haven't seen Trump yet going into the Oval Office, no, but and yet we are seeing all these things happening already. Actually, leading months leading to November election, the market has actually have that feeling already, no, that Trump would win, no, the November election. But it's one thing to anticipate it, and it's another thing to see it actually happening, no, and this is the market telling us that maybe, no, what would come, no, after the Trump win definitely is good for the US, no, but for everybody else might have some rethink to do.
And Aaron, I wanted to get your perspective on this. How much of the dramatic action we're seeing, yesterday's sell-off in particular, was on account of external factors like in the U.S. Trump's win, and how much of it is because of third quarter earnings locally? We got a mixed picture from third quarter earnings. So, I mean, is it really all about the macro environment right now? Is that where everybody's taking their direction? How much of it was because of the mixed bag that we saw locally as well?
Well, if you're talking about the PSEi as our main gauge, though, the earnings of the heavyweights, no, in the PSEi are not that bad, no. Most of the banking and the property sector names are actually doing better than expected. No, there are some misses in the weighted, less weighted, no, less weighted members of the PSEi, which can still drag the index, no, but not as much, no. So I think the drop that we have been seeing in the past several days now from the PSEi in as a whole, no, is really can be largely attributed to the macro factors that we have been accepting, no, and taking in, no, for the past week.
Yeah, we saw some pretty big drops yesterday. Worst performing stock yesterday was Bloomberry. It was down by 11%, as the expenses of Solaire North creep up and hurt it financially. And then URC down 7% yesterday. Now, in this environment, given the drop and today's, bounce from it, what are the stocks that you suggest investors pick up right now?
For now, I would like to advocate prudence. No, again, we have to wait this out. No, we have to wait for the market to provide us the price action that resembles a bottom. No, before we even load up on stocks again. No, but I think again having guided, no, those people that we have opportunity to share our thoughts with, no, I think the possibility of the bullish stance for the PSEi for this year and the next one, I think as long as the PSEi trades above 6158, no, there's a good possibility to the bull story for the PSEi remains. And having said that, the banking and the property sector, again, as heavyweights in the PSEi main index, would definitely be a good list, no, to consider, no, once this pans out, no, the higher low that we've been anticipating for the PSEi. Again, if we don't trade below 6158 and make a consolidation around these levels, no, and then go higher moving forward, then those are I think, no, what could lead, no, the market go higher moving forward.
All right, thank you for sharing your thoughts this morning with us, Aaron. That's all the time that we have for this. So that was Aaron Sai, the market consultant from First Metro Securities. Now, on another front, the value of the global cryptocurrency market hits a record high, fueled by Donald Trump's return to the White House. According to analytics and data aggregator CoinGecko, the total value of cryptocurrencies reached nearly $3.2 trillion in Asia on November 14th. Bitcoin dominates the market, also soaring to a record $93,000 per token. Trump's election victory, along with the success of several pro-crypto lawmakers in Congress, has spurred expectations that friendlier U.S. regulation could usher in a golden era for this asset class. Trump has previously pledged to make America the cryptocurrency capital of the world. With the U.S. moving toward more positive crypto regulation, the Philippines could benefit from increased interest and investment in the digital economy. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.